afternoon this Thursday, August 3rd. Grain futures had the wheat and corn, again, probing new lows for the month. Corn under $5 as yesterday. You already heard X-Stone came out with their corn guess of 177 bushels to the acre, which would be a record yield, or near record, we should say. Haven't been able to do trend line for several years now, and trend line, of course, up to 181.5. Many are suggesting that that might be a hopeful number. The improvements for corn after the pollination took such a beating under the heat and dryness that, yes, it's very nice that rains have arrived. Not for everyone. It's very variable. And so it's going to be difficult to probably get yields with some models with the condition reports out yesterday or Monday. We're about 172, 173 bushel per acre. Maybe we can improve to 175. But still, the bearish aspect is that carryout is still near 2 billion bushels. And the USDA, whenever they back yields off, they always seem to also back off exports at the same time. So it'll be interesting next Friday as we still get more guesses coming out. The soybean yield, though, they came in at 50.5 bushels to the acre. Now, that tightens things up because with the acreage down to 83.5 million, we do not have room for much at all. And so anything that would put beans under 50 bushels to the acre would start to become a problem. That's why the beans tried to do a little basing action today, just above 13.20. Oil exploded back higher today. Yesterday, breaking down hard after touching 82.5 on the biggest draw in oil for the Department of Energy numbers in 40 years. Down 17 million barrels, but still we collapsed in price. Two reasons was the bad Fitch data for giving us our lower credit rating for the U.S. Put that into the spin effect. I don't know why it should have been, but there was a major story they claimed against oil, along with the Biden administration, more importantly, canceling a 6 million barrel buy to put back into the strategic reserve. So the bloom came off yesterday, but we exploded today. A couple reasons. Saudi Arabia came out and they said they will extend their 1 million barrel per day cut beyond August, well into September. And if they need to, they'll increase it and carry it for the rest of the year. And of course, Russia came out. They also said they're going to cut exports by 300,000 barrels per day coming up in September. So that got the crude oil market on the sharp rebound today after challenging our 82.5 resistance value, which had hit yesterday early in the morning hours just to get clobbered lower, but back again higher. So what next? Well, we'll see. It's got to get through this 82.5 on the news. You do have a 1-2 and then a 1-2-3. 3 is a little shallow here. This could be a 4 and then a 5 push, unless they want to break this down and just call this thing a total ABC recovery bounce. We'll see. A lot of bullish news out by tomorrow on Friday. We need to be punching through 82.5, more importantly, closing above 83 to break this thing out. Otherwise, we can take a look at this 6-hour chart. I like crunching it up. You can kind of see how this thing tries to define the market, with the bumps. We're well above the bumps now, so we know we have a low. You can see intraday how we pulled back overnight, hit the aggressive trend line, turned back higher today. So if we do stall, you're going to see the crude oil market break harder then, and eventually we'll come down and challenge this support, which is rising into next week, probably something near 76 to 76.5 if they can break this thing down. You ask how, ask a lot of questions, and they seem to pull off bearish selling when you least expect it. So we'll see. On the crude oil again here, something of a break, this 76.5, 77 area on any setbacks. Our next turn date will be August 20th, so that's about still 2 weeks out. We'll see whether that's a high or low. I can't even dare to predict what that might be. So let's go to corn, which did not get any support from the rising energy. The corn market drifting lower still after a wave 2 high last week. We're working a wave 3, but this wave down is getting a little extended and due for a bounce. If we subwave it, you can see this little 1-2, and then we had a 1-2-3-4-5. Here's something interesting for you. 5's typically equal to 1. This move was exactly 30 cents. Guess what happens when you take the night session low from the other night at, 5.23 1/4? Take 30 cents off, you get 93 1/4. Plus, we showed you this in the newsletter yesterday. Price Association support here at 93. Something should happen here, calling this a first wave down, get some kind of a wave 2 bounce going. What creates it? I don't know. More bombing, who knows? They always seem to find a way to produce some kind of a bounce. And so with this, maybe it's the yield guesses coming out later on here are going to be much lower, and that produces some kind of a bounce here. Whether it gets much above 510 to 512 will be tough. When these things get bearish, usually you just can't take out previous highs, let alone trend lines. But still, something should create a bounce that we will label as a wave 2. Beans here too, we hit first of the month low. Typically these create turns. Sometimes they come a day early. Maybe we came a day late. I know there's an outside day down here, but usually after an extended rundown, unlike an outside day off the highs, it's usually a blowout vacuum that everything's played the game out and now it wants to bounce. So we'll see a wave 2 bounce. We get something going here. I could even see how we have a 1, 2, 3, 4, 5 down here. Something should be working in A, B, C, something into that 1650 again, 1350, 1365 range. I do not think we will plug this gap, but the point is anything up into that 50 to 60 range is a sell as we continue lower into early September, with obviously weather models continuing to be friendly. Wheat, Chicago. What a move, especially Kansas City, peaking in 7 days, just disseminating everything they put on since their July low. Hitting trendline support today, closing just under it. Wheat is notorious for when it wants to turn. A lot of times it'll just the next day open and rally. Not the case here. We had a reversal action. Not the case here, but I could take you back in time and see a lot of that. It'll just like this one here, just closes near the lower level and just turns up the next day. Same thing on this situation and this one. But we'll see. We got to hold. We got to get corn to bounce in order to give wheat some enthusiasm or blow something up again in Ukraine or maybe the Kersh Bridge. Fibonacci-wise, we could bleed a little more to the 78% retracement, another nickel below today's low if they want to bleed. Kansas City wheat, we went and double bottomed with the May low today and closed right there. Still a D wave can be called this, and then an E wave recovery rally. Wheat has a story. I mean, you've even got India now working with Russia trying to buy us up to as much as 9 million metric tons of wheat, when earlier rumors it would be 3 to 5 million metric tons. The world wheat trade is going to pick up. How these funds pull this off, maybe they work for the Federal Reserve or something and they want to keep the price of wheat cheap with all this extreme volatility. I've been at this 30-some years. This is absolutely amazing. But what I see here is trying to get a base built. And, of course, this last hammer time could quickly get recovered, but we shall see. I just want to show Minneapolis wheat. That's been the strongest of all of them. The spreads have been winning there. Here, too, like the Chicago wheat, just right on the trend line, closing below it. We need to see buying tomorrow. It's kind of that simple. Otherwise, the funds still control this thing, and they're still helping deflation for the Federal Reserve. Hogs, note of interest. We've been waiting for a hog rally up into the 618, 786% retracement. We call it the box. Dennis reflects this many times. Breaking lower today. Now, you might not think much of it right now, but it probably is a confirmation of a top. We look at this moving average action. More importantly, look at this trend line. I mean, hogs are greasy, but look at how perfect they created this trend line. It's quite amazing. Gapping lower this morning, plunging on it, trying to recover. And I will tell you, recovery rallies now, this moving average will be the resistance. Probably the gap will not plug, but they could probably try to rally back into 83.5, somewhere in that range, 80, maybe close to 84. And then that's a place to short them again or get your hedges on. Our livestock rich protection programs, if you haven't yet. And then I believe you're going to start seeing these hogs trend lower into September, October. This is Eugene Grainer with Heartland Investor Capital Management. If you find this information useful.